Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer Brian Johnson, making professional trading simple and a little bit of a trickle up today. Once again, news came out. Dubai's okay. It's all right. We're going to cover everything. And on that news, I mentioned that we may see a little trickle up, being that it's month end as well, and we saw a little trickle up today. So markets Dow up 34, S&P up 4, Nasdaq up 6. I would call that a slight trickle up to the markets. So obviously there's no big scare yet, based on the news and the bank problems, or so it would seem to be a problem with the Dubai stuff. I think a lot of other people were talking about doom and gloom. Monday morning going to be bad. Everything's going to open up down. Yeah, I wasn't all that convinced. Usually they have squelched that, and really, they have done what they've needed to do so far to take care of those problems. So investors have no reason not to think that that won't continue, because they know they've seen so far that the governments will throw all kinds of money at the banks regardless of compensation or whatever. They don't care. Just here, take this billions of dollars, and just don't let the banks fail. We don't want to have the same crash as we've seen over the last couple of years happen again. And so when the UAE came out and said, nope, nope, got it covered, there wasn't a worldwide panic this morning. There were some indices that finished down, but most of them actually fared pretty well today overall. Now let's take a look at the markets, see what happened. On the 60-minute, you can see the Dow did break this channel, has now retested it a couple of times. And we'll probably struggle with these moving averages. But if the news stays healthy and good about retail numbers, or Christmas, or Monday having good participation from the Christmas buyers, we may see this actually gap up over this area in the morning, and that could then could lead the way to a little higher move as we near and come into December. But as it is right now, we are below this channel line. We're below these moving averages. We need to get up and over them. If we do, I do believe we see some bears cover, and that may push this thing back up to these highs, or towards these highs again. Keep your eye on that in the morning for that move. Otherwise, a break back down below here, and you can see how we tested, or almost tested, this 10-200 last week. Another test of that is what the bears are looking for. So long over these moving averages, short under this, I would say even this area here. If we can get below 10-250, then we should see some very heavy support at 10-200. Then below that, we should come all the way back here to this area here for the next support to hit on the Dow. If we look at the daily, you can see us just a sideways inside day. Stayed right inside the previous day's candle. So it's once again anybody's guess where this will head tomorrow. But like I said, with the news coming out about Dubai being in good shape and nothing major causing the markets to crash this morning, I would expect that maybe we still see another follow-through day here to the upside. Watch the 60-minute to make sure it gets up over those moving averages. The Nasdaq also has a little bit of room to move. I said it was in tweener mode, stayed there most of the day. When it touched here, is a very defensible long option right down here at this support area. Then a move up, a very defensible short is up here at this overhead resistance with those moving averages. Be watching those as we enter tomorrow. That is only about 10 points away on the Nasdaq. A break up and above, though, we may see that thing run all the way back up here to 1790, which is a gap fill, and that could lead us into lead us into December, getting it off with a bang. For the techs, maybe Apple, some of them start to really pull their weight coming into the Christmas season. And that would also coincide with this overhead resistance here. So we have two areas of overhead resistance. That would be a very logical place for the NDX to kind of move towards. If you look at it on a weekly, we really are just looking at a pullback the last couple weeks. We have to get a major move down to these moving averages or below to really make this a bearish looking weekly chart. As of right now, this just looks like a little bit of a pullback. So By the end of the week, to get back up to 1815 would not be out of the question. However, being Monday, I don't like to look at weekly charts till we get towards the end of the week. SPX on a 60-minute back to resistance has overhead resistance with those moving averages, as does the Dow. These are the things to watch. Now, the 1098, obviously 1098 to 1100 area has been strong support and resistance in the past. It will continue, I believe, this time as well. So on the first strike of it, you want to be careful, obviously. I would not recommend going long at the 1098 level. Make sure it gets up and over that. And then any break to the upside could take us back to 1110, which would be that gap fill on the S&P. And why not? We've been doing nothing but moving sideways so far. The 1085 to the 1110 area has been nothing but a large trading range for the last 2 weeks. So why not see some continued moves up and over 1100, right back to 1110? Makes perfect sense in the grand scheme of the markets and their direction right now. Really waiting for a break below the 1085 if you're bearish. Then look at the 1075 area below that. Should be very heavy support. It has not been tested for a while. And it is the 50-day moving average. So a turnaround and a break below 1085 takes you back to the 1075 area. That should be very strong support. However, a break below that, we could see some continued bearishness move in. If we can get below this 1075 area here, watch for it to maybe retest this lower trend line. And that right now is about 1050. That's a very interesting number, being 50 points away from where we're at today. But 1075 is about the only thing standing in our way to that mark. SPX on a weekly, once again, it is Monday. Won't care till later in the week, but based on the last couple weeks, just looks like a little bit of a pullback. So things are still not overly bearish on the weekly. The only thing bearish is that we have broken this rising wedge, and now we are retesting the underside of it. That would be about the only thing to look at from the bear side. On the VIX side, we were down ever so slightly today, but after that huge move up in the VIX, that was to be expected. We'll see if fear comes back into the markets. If there's any kind of news that is released that Dubai is not going to be able to handle that billions of dollars that we've heard about last Friday, then obviously the fear is going to pour into the markets, and we'll see this thing reach this 30 mark in no time at all. So for those of you holding options from back in this area, you will see a very nice premium rise as that moves up. Otherwise, let's continue to watch this area. The 20, the 200, and this other support area are all right here for the VIX to sit on for the week and maybe launch itself from there. Apple on a 60-minute down 68 cents today. Mostly just chopped sideways. Nice move down. Another move up at the end of the day, but overall, straight sideways. Still really no trade here in Apple.